Hey everyone, welcome to another episode of What Ted Says, where it's always time to get a fatter wallet, a leaner budget, and a bigger net worth every Monday, every Thursday. That's where you get these videos. Click that subscribe button. That's how you're going to get all of the great information. Now, the IRS has unveiled something that you need to know. There it is. The IRS opened the coffers, and the tax rules have changed in 2023 and 2024 for home renovations. These changes were designed to support you as the homeowner to improving your properties and fostering the new energy efficient and accessible homes that are out there today. And you can make yours as well. So the government created these rules underneath the Inflation Reduction Act of 2023, and energy efficient improvements include a lot of things. It offers credit for specific energy efficient home improvements. This could be an air conditioner, it could be windows, it could be doors, roofing, even insulation. The mice have chewed through that now, or chewed through it, but certain other heating equipment as well. There's also the renewable energy systems, the tax credits that are available for the installation of things like solar systems. I almost put a Tesla roof on one of my homes. You don't have to do that, but there's also solar water heaters, and there's wind turbines, and there's geothermal heat pumps. Now, mortgage interest is an interesting one because in some cases, mortgage lenders may also include money for any repairs or improvements. You've got to negotiate this when you do the mortgage in the form of a loan. Therefore, you can claim any mortgage interest as part of the mortgage interest deduction, including the interest on the loan for these renovations. A lot of people ask me in 2023, 2024, how about home office deductions? Can I take that at all? I'm working at home. Well, if you use part of your home exclusively and regularly for business purposes, you may be able to deduction of the portion of home-related expenses, including mortgage interest, utilities, and depreciation. Remember this, you can take a standard deduction up to $1,500 now, or the square footage of your home. And by the way, a lot of people don't know about medical improvements. If you make any improvements for things like being ADA or widening ramps or doorways, if you're disabled or handicapped, you may be able to deduct some of those expenses if they exceed a percentage of your adjusted gross income. Now, if you're making big capital improvements to your home, they may not be immediately deductible. But remember this, if they add to the cost basis of the home, meaning if you bought the home for $300,000 and now you added $100,000 of improvements, your cost basis is $400,000. It means when you sell your home down the road, you're going to pay less capital gains tax. All of these can really reduce your sale. Remember, all of these may be able to reduce the gain on the sale. I want you to remember this. When this Inflation Reduction Act went into place, these tax credits can be up to 30%, and they can be massive. It may be a couple of thousand. It could be tens of thousands of dollars. And if you're thinking about doing things to your home, make sure that you check out these tax credits first before you do anything, because what is getting a fatter wallet and a leaner budget all about? It's really all about you understanding the tax code, and while you're doing things that you were going to do anyway, it's basically implementing that so you keep more of this money in your pocket. Use these tax credits and other programs I discussed today, and you too can put more money in your wallet. That's this episode of What Ted Says.